Hey guys, Mike here. So, oh boy, we got a big week ahead in the market right here for a number of reasons. One is we kick off earnings this week. It's going to start with the banks. We'll go over that. Another thing is coming out of China, what they're doing with Taiwan. That's a hot mess, which we're going to touch base on a little bit. But also, what do we got going on? CPI. A lot of manufacturing data, a lot of home data for that industry, but CPI is going to be the main thing happening. And another thing you're seeing, this kind of discussion I think I see all over the place right now, is this right here. U.S. bank lending drops dramatically by a record 104.7 billion over the last 2 weeks. And if you look down at the bottom, that's where it says the rate of change down there, and you can see that's the biggest drop we've ever seen, really, in 2 week span. And the big discussion is, why don't the banks actually increase their deposit rates, right? So I just posted a video like literally 2 seconds ago into our Discord about this that I found for people. And the reason why they hadn't been doing it, they haven't had to. They had so many deposits come flowing in through 2020 when we stopped spending, especially the bigger and larger banks like Bank of America and stuff. They don't need to do that, right? And the other thing is now of course, now the regional banks are being forced to probably increase their CD rates because that way you'll lock it in with them. But the bigger banks won't, because a lot of withdrawals came out of the regional banks and went into the bigger banks, right? They're sitting on just mountains of deposits. So they're not going to do it. And two, they also know we're a creature of habit. We don't like change, right? Most people just don't like change. And they'll stick with the same bank forever and ever, no matter what they do. And so there's no reason for them to do it if you're wondering. So the online banks are newer banks, so of course they can do it. And they don't have all the overhead and things like that. And they're trying to attract your money because they're newer, right? They haven't been around as long as Bank of America and all these other banks. So keep that in mind if you're looking for it and stuff. The other thing is, and this is one reason April's so good, how are the tax refunds going to do, right? Right now they're projected to be 10% smaller than they were a year ago. Average was 29.10. Currently was 32.26 last year during the same time period. This is another reason why April usually does well, in my opinion, because people are investing. And your accountant goes, hey, you still got time if you deposit, make up the max of your IRA, whether it's a Roth or traditional. Traditional will give you a tax deduction, most likely. A Roth will not, but at least you can max out your retirement savings. So that's one reason I think April is so big. People making those last minute deposits to get the max out from the previous year, right? Now, the other one's going to be this right here. China this weekend simulated hitting key targets on Taiwan. And they were running their military operations, and they're upset because the president of Taiwan just got back from visiting the U.S. They're like, hey, hold on a second. Again, the long-term plan for China is to take over Taiwan. And I want to hear your thoughts in the comments on this one, because if China did invade Taiwan, would you want the U.S. to step in? And the reason why I ask that is because it's not just an easy answer to me. Because understand Taiwan, from my understanding, they own about 72% of the chip manufacturing industry. And so if China took them over, with their combination, China would own about 83%, if not more, of the chip manufacturing industry. And so, that means they could hold that over our head. And we saw what happened if they do go to war with Taiwan, and it's an extended war, then it's going to interrupt the supply chains, right? And we already saw what happened when you can't get chips. And so I'm just curious to know what your thoughts are on that. Would you support the U.S. intervening or not intervening? And so, again, I don't think the answer is cut and dry on that. But again, I think it's a little tougher. And I'm always, it's a last resort for me to send our men and women to fight for, especially another country. But in this case, it's almost like a national security issue if that were to happen. And so just I don't know, keep that in mind on that. But, earnings we talked about Friday is the big one, right? I mean, Thursday, if you want to hear the Delta, sure, they'll tell us if we're actually traveling, all that stuff, which I think we are. But the banks, the big ones, the JP Morgan, Citi, Wells Fargo, BlackRock. And so that's going to be key, especially with everything that's been going on and stuff. And the markets definitely will react off this for sure. Again, I don't think it's going to be first quarter earnings. If we were to go down, I think second quarter earnings will be worse than first quarter if the economy continues to slow like it is. And if you get anything out of this, guys, please hit that like and subscribe button. I really appreciate it. And if you're new, think about subscribing. If you like this content, I really appreciate your support. Now, this leads us into the charts, right? So you got the S&P still in this wedge, right? Still just sitting in this wedge, just sitting right there at the all-time high, anchored VWAP, right? It's been moving up in this channel. You got basically supply up ahead of it. You got demand below it. And so, again, CPI data, all this data coming out this week, which is enormous. will move the markets one way or the other. The question is, are we finally going to get the move up and break out and start challenging and testing the higher levels, or are we actually going to sell back down to this bottom part of the wedge here? That's really the only thing I'm looking at on that one. Now, what's going to help this fight is what they see estimations are for S&P when it comes to earnings. And you can see it just keeps dropping, right? And so again, the bar is going to be extremely, extremely low. I don't know how they don't hit it, to be honest with you. I believe they will hit double, but it depends on how the market takes into account the forward guidance. That's going to be the key, right? Then, of course, you have Apple. The major stock sitting right here. You saw it rejected for the 4th time off that trend line, right? So that is a major resistance for this. Again, when you look at it, it is not overbought yet. It looks like the MACD wants to roll over, but if CPI comes in lower than expected, which we're going to talk about in a minute, and the data comes in lower than expected, absolutely. If this breaks above that trend line and turns it into support, you're going to see probably all-time new highs for Apple. And then you got Microsoft, major supply zone right there, as you can see. Trend line on top of that, it rejected for the 4th time, so it's sitting right at it, right at that supply zone. Again, it's like Apple. If it breaks above it and starts going, then you're talking about like 313 being the next target. And so, keep that in mind. Again, those two account for almost 13% of the S&P as they're weighted. And then Google, here you go. You got the gap. It filled half the gap, still got half the gap to fill, sitting right there at the all-time high anchor VWAP, so that's going to be resistance maybe. But again, watch out for that to fill that gap. Then you got NVIDIA, of course. Everybody's been trying to short this like crazy. Again, it's setting up against that trend line, setting up against a major supply zone right there. Got a big gap below as well. And so, can this move? Absolutely it can move. You can see right there, it's sitting right there on that support line I drew in there. And so if the market does bounce, NVIDIA is going to bounce with it. And so to see if it can head back up and get through that supply zone. If it breaks that trend line and supply zone, again, it's going to start challenging all-time new highs if the market continues to want to turn bullish. And if we just look at the weekly very quickly, you can see right here, again, the RSI is overbought, but it's been overbought for quite a while. MACD is definitely stretched, but it will go where the market goes. That's just the way it is. These are cyclical, and it will move with the market. Now, gold, watch out for gold here, right? I don't ever talk about gold, but this one's sitting in a major supply zone. It's the 3rd time since June of 2020. It's been up here. It's been up here another time way back in 2011. But again, this has had a big move up. And if we scroll back, you see what I'm talking about with 2011. So that is a major, almost like psychological hurdle for this to try to get through. And so you got to look at that. Also, the other thing to be looking at with this right here, if we add in why you're seeing this rally, it's happened since October. You just pull up the dollar. You can see when the dollar weakens, which is what's been happening since October, gold goes up. It's not 100% direct correlation, but when you look at this chart, you'll see a lot of times when the dollar was strengthening, what happened? Gold went down. So people are expecting the dollar to keep weakening. That's why they're going into gold right now. So keep that in mind. Now, like I said, when it comes to the economic data, right? Monday, don't have much to worry about. Just going to be some inventory stuff, consumer inflation expectations. Fed presidents will be out like crazy trying to do what they want to do. Tuesday, you're going to have the NFIB Business Optimism Index. That's something to pay attention to. Not really that big a deal. Wednesday is where we're at. I mean, this is loaded, okay? All about the mortgage industry. Then at 8:30, here comes the inflation data. Core inflation, inflation rate, which if you look, prior was 6%. They're expecting a 5.2%. That is a big drop. They're actually expecting an increase in the core inflation, right? So which one's the market going to react off of? We'll have to see. I think that's the biggest drop they were expecting in inflation. So that's going to be really interesting to see. That'll happen before the market opens. Okay, so we were either open green or red. That's for sure. And then after that, you're going to get a bunch of stuff about oil, which I don't think most people will be paying attention to at that point in time. Because the CPI will dominate. 2 o'clock, you get the FOMC minutes. I think it's where we'll probably get the dot plots and see what they're projecting forward. Thursday, again, here comes core PPI. So now you have more out there that's going to affect the markets, right? Continuous jobless claims is going to affect the market. That's going to be big. Natural gas, which a lot of people are betting is going to get a bounce. You're going to have some information on that as well. So again, on PPI, they're expecting prior was 4.6. They're expecting like 3.1%. That's an enormous drop. And so we'll see. I mean, I'm gonna have to check those because this is what this says. I'm gonna have to check and see if those projections are actually correct though. Then Friday, you get all about the retail sales. Are we still spending? Manufacturing data, industrial data. So this is going to be a crazy, crazy week of data. Basically starting on Wednesday, right? And so we'll see where the market sets us up on Monday and Tuesday coming into that. But you know, it's going to be, here's what we do know. It's going to be volatile, right? Again, I'm going to, and let me know in the comments if you see anything different. I'm going to check on those projections because that is huge drops. I mean, that's the biggest drops we would have projected so far when it comes to CPI and PPI, right? And of course, we don't have a Fed meeting this month. That comes next month, right? And we don't know how the job reports are turning out. They're kind of all over the place right now, right? I mean, the unemployment rate dropped, but it came in as leveled out. And then the two before that, you know, the market basically sold off on them. And so, you know, the economy is slowing, but eventually we still got to have this thing where when the market sees, oh, look, more people lost their jobs. That's great because the Fed won't tighten as much or they'll have to cut rates and it keeps rallying up. Eventually there'll come a time where the market goes, oh, this is really bad, right? And that's when it affects earnings, right? When the earnings get really affected and they go, oh, and then sell it off. If that happens, that's the thing we just don't know. If you didn't watch my video yesterday, I'll link it at the end here. It's a longer video, but it is a ton of data. I appreciate you guys sticking through that one. To kind of let you know, because you hear the doom and gloom or say the economy is in shambles, and then when you actually look at the data, you're kind of like, meh, you know, I mean, according to the data, not so much yet. But again, it can turn quickly, you know. But I think this job market, again, like we've never seen before, it's what's just holding everything up right now. As long as you have a job, you can pay off the credit cards you're running up, pay off all your bills, and that's why the delinquency rates are so low. And plus, for those who don't know, and thank you for putting that in the comments, some of you guys, was there's still programs out there to help people with their mortgages and bills that they are behind on. They're even making it easier for people to get that stuff now. So if you didn't know that, that's what's still going on behind the scenes. So in a way, that's a form of liquidity, right, coming in the markets. And so when those cut off, right, like some of the SNAP benefits have cut off, then we'll get to see when we see student loans kick back in, if that ever happens. I think there's 6 lawsuits now pending, so who knows how long that's going to drag out for. That'll have an effect, right? But it's going to be a delayed effect. That's just the way it is. So anyway, hope you guys have a happy Easter, great Easter. And I'll end up seeing you guys tomorrow. Don't forget to hit the like and subscribe button, guys. Really appreciate it. See you on Monday.